Good day, Team GCI. I'm Brad Alexander, and in today's GCI Market Outlook, let's take a look at Forex trading on dollar-yen, euro-dollar, the FTSE100, pound-dollar, the NASDAQ, the Nikkei, and the Hang Seng Index. The news on financial outlets today is about the sell-off in Asia, as we can see from these price action gaps on the Nikkei and the Hang Seng. The question is, will the risk-off sentiment spread to the major US indices? Before we look at that, don't forget to like, subscribe, and get notified on YouTube, Facebook, and Instagram, and please check the disclaimers on the GCI website. We see all the major US indices like the NASDAQ falling on political uncertainty, geopolitical threats, and the fear of an AI bubble. We may yet get our Santa Claus rally later in the month, but right now investors and traders are watching the economic calendars. We're expecting, finally, the delayed non-farm payroll report, but the data may be way off due to the confusion. If the result is worse than the 51,000 jobs or the 4.5% unemployment rate, we will see a fall in US dollar and, in this uncertain market, volatility in the indices. That doesn't mean the indices will fall. Poor employment data may indicate to the Fed to lower interest rates, which is good for the indices. Just be careful and watch for pullbacks before direction is established. We also have interest rate decisions from the Bank of England, the European Central Bank, and the Bank of Japan. The prediction is the Bank of England will lower rates, making GBP weaker and the FTSE stronger. We see a strong GBP on the daily GBPUSD chart, but price action has formed a rising wedge, which is a reliable bearish indicator. On the UK's FTSE100, we see the opposite of the Asian and American markets, and again, the BOE news may trigger a further rise. The euro is stronger generally this year, and you will see that on almost every time frame, euro-dollar is very strong in the 1.175 area. We see an ascending triangle forming, so let's keep an eye on the charts on both US and ECB news this week. Finally, the Bank of Japan are predicted to raise rates, and the yen is already getting stronger. On the daily chart on dollar-yen, we see price action has formed a double top and a long way to fall to the next level of support. However, looking at the 4-hour chart, we see what could be a falling wedge. Regardless, watch the economic news from the US and Japan for clues. That's all for now. CFDs and FX are leveraged products, and your capital may be at risk.